Right, well, it's been a super long time since I last streamed, and I'm not even sure if I can remember how to do it. I think I've got it all right, and hopefully, people will be able to hear me. Uh, I've been just busy with other stuff, doing a lot of trading. I've also had some other work to do, but if you're new to this or whatever, and you don't want to hear all my excuses for not doing anything, so I'll cut to the chase. And until people start coming in, I have no idea, you know, how many people will watch this because I've been offline for so long. And one of the cardinal things you've got to do is keep doing it, keep doing streams if you want to keep your audience. But anyway, I can ramble on for a few minutes just talking. I think a lot of people watch these posts anyway, so AMAs are always a bit tricky for me because I don't get that many people at the times I stream because I'm in the UK and most of the people who watch are in the USA and they're fast asleep. Well, they should be. But I don't have time this afternoon, so I'm going to do it this morning. And feel free to come onto the Discord. The links are down below. You can see, come into our free channel. We have a free channel which allows you to just ask questions of us and work out if it's worth paying. So go and do that if you're interested. So what have I got to say? Well, nothing's really changed. I know I sound a bit like my partner Mayfair. Nothing's changed. I mean, he predicted most of this stuff. I think the only thing that has surprised me is that we've rallied so hard. I would have expected us to stop around here, around 41 and a half. And in fact, I sold the last of my DCA Bitcoin at that level, thinking to myself, right, this is pretty good. So if I don't know if you remember, but I DCA'd in anywhere between sort of, I think the 32 was the highest I paid, and the lowest I paid was low 20s, 21 or something. And I was, there's Euro USD crossing something. I've been trading a lot of Euro USD recently. If you look back at my previous stream on how to pass prop firm challenges and so forth, you'll find there's a method there for doing it. Anyway, so what was I saying? Yeah, so I DCA'd in, I don't know, average 25 and then got out at 41 and a half, but averaged out at probably around 38. So I mean, 25 to 38, that's actually quite a significant move. However, it is over a long time. So when would I have started getting in? Yeah, about 9 months ago. But it's still a decent percentage. And I don't put aside masses into my crypto portfolio. Bitcoin and XRP are only ones I'm interested in particularly. So I would say, that's a reasonable return, and I'll bank that, and I'll wait for it to come off again because it really should come off now, and it's just a question of how long it takes. And the thing is, we've had our, let's just get this, we've had our Elliott wave. I think we've had this, and now we're in a consolidation. We're in a corrective, which typically they're 3. So you get A. I'm going to call it. It could be a 5 wave down, but I'm not really bothered. So that, in large terms, is A. This is B. We don't think we get a C below. Actually, I think too many people are interested, and this has become much more of a sort of institutionalized game. So I'm expecting not even perhaps a double bottom. I'd say that's where I've already got orders in to start DCAing in again around 21. So this is the kind of pattern I'm looking for. In broad terms, I would say that the thing that you've got to look out for is what is value. So value is kind of, I'll put it between the 4 and the 1. So anything under here is value. And where the big boys are selling, so I'm going to change that to green because that is value. And all this stuff up where we are now, this is everything above here is not value. In other words, that's where they're selling it out. And who are they selling it to? Well, they're selling it to people like you. Though if you're in our Discord, they're not selling it to people like you because you're not stupid enough to buy it. Ghost is here. Hi, how you doing? So Ghost is one of our members, and I think he'd probably type up that he's learning quite a bit. After all, That's what we're here for, to teach you to have this sort of view. So largely in retail, you're going to get people who get fired up by this and think, yeah, hey, this is definitely going up, and they get in, they buy in this sort of area, and that's exactly the wrong sort of area. You need to be buying, we told you, and you can look through my ideas if you want, that down here, get long. That's what we said, down here, get long. And everywhere up here, we said, get short. And so I say get short. I don't short this because it's completely, when you short something, you've got to pay margin, and you can get caught out really easily by, spikes like this one. So even if you got it right and you sold in this sort of area, and I honestly believe this is was a good area to sell, you could get caught out by that spike, and that spike is deliberately there to catch you out. And if you look at it closely, let's delete some of this crap here. If you look at it closely, what is it? It's just above that. So people put in, let's get rid of this, people put in their stop losses just above that. And so guess what happens? It fires out your stop losses, and just snatches all that liquidity and straight back down. So you look like idiots. And that's exactly what the market does. And interestingly, it's good, because what it means is that we can now treat Bitcoin as an institutionalized instrument, because the big boys are playing in it. And why is that significant? Because they are predictable, okay? They want your money, and so they do certain behaviors which makes them more predictable than some other random shitcoin. So for me, it makes me more comfortable trading this. Now, it's still bent. So if you're trading crypto, all crypto is bent, because the exchange can see all your orders, and they are allowed to sell that information to the big boys. And so the big boys can tell if you all went short here. They know where your stop losses are, and they fire them off for you. And that is what they do. And that can't happen in other markets, or if it does, it's illegal. So that's the situation. You've got a situation where that's the big deal about this. And I would encourage those of you who are interested in crypto and like trading it to move to foreign exchange or commodities or stocks or indexes, because it's better policed, and as a result you're less likely to get caught out by rogue wicks and so forth. Now, it's all probably a bit intimidating for the foreign exchange. I mean, I can remember when I started as a trader in 1987 being very intimidated by the whole foreign exchange thing. I was really confused by why it was quoted like it is. But if you regard, and the same goes, for people who have just been into crypto, if you look at indexes like the S&P and NASDAQ and so forth, they have one thing in common. They have a price, it goes up, it goes down, and there are certain patterns you can find in them to make money. And I would say that they're more reliable in all the others but crypto. So have a think about it, maybe come onto our Discord and look at it and say to yourself, do I want to be trading crypto, or do I want to be trading something a little bit more predictable? And even within foreign exchange, there are more predictable ones. I mean, some of them are horrid. Euro USD, which everyone starts with because it's most liquidity and it's just full of retail. And retail means everybody who isn't a pro. It's full of retail. That means the pros can absolutely rip off more than usual. But again, Euro USD is something I didn't trade at first, and I'm now trading it more comfortably because I know what the pros do to get and I pretend to be a pro when I'm trading. So there's a little plug for everything else. Just see if anyone's asked anything. Just absorbing word by word. Well, yeah, good. Everybody should. And please do ask me stuff. I mean, you can ask me about anything. It doesn't have to be trading related. I mean, I've got a big thought in S&P right now. Okay, so let's switch to that just to see if we get anything else. Let's go for the daily. So I'm looking at S&P, and it's reaching new highs. Yeah. And if you look through stuff I've written recently, you'll notice, let's go and see, and I recommend you read these. Things like this: crash still coming, don't short yet. Where's the other one? crash coming soon. You know, I predicted, I think this is, when's this? September the, no, I originally wrote that. When's that originally written? I updated it on the 12th of September this year, but I actually think it was written September the 7th, yeah. So what I was talking about in this one is the fact that around September, everyone was on about recession, and as obviously the market came off, and I just thought to myself, right, this is going to go down and then back up. Okay, it's going to go down, and you need to be super careful about it, because what happens is it goes down, everyone thinks recession, 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 and then it starts to go up again, and even the pros get short into this sort of action. And so what I'm warning in the latest one is we are going to make new highs, and then we're going to head. So, and I use the COT tool to, you know, illustrate this. People are building up shorts in the pro market. So going back to S&P, I believe this makes new highs and carries on going up for a period. And I am having a meeting with my independent financial advisor in February, and I'll be saying, right, I've had enough of this. So if we look at how much it's risen, when's this? Let's go back to 2020 when we had the crash caused by the pandemic. Really, it's gone up 120%. Now, if you've had an investment, and most of you are in pensions and so forth, and it's gone up 120% in, what's that, 3 years, that's quite good, isn't it? So I call it profit taking. I'll get out of it and I'll sit in bonds or something else with a regular, and interest rates have risen, so it's worth sitting in stuff at 5%. S&Ps, for example, the dividend yield is fractional nowadays. People are in it for capital gain rather than dividend yield. It just hasn't been around. And so for me, I'm bearish on equities. Confident Clouds is asking me, thank you for your insights. What would happen in order for you to change your mind regarding the next move for BTC? I don't think anything will change my mind. I mean, if it rallies even more, let's go back to BTC. If it rallies even more, I think, you know, I'm absolutely tempted to sell it. You know, the reasons, I mean, I can go into some of the reasons. I mean, basic price, you can see this, where we are now, in fact, is a really good example. So if we look at exact basic price, you know, you can see what I call an inversion. It's not alt, I need only control. So price, once it gets over this, retests it and stays there. Once the price gets under it, it retests, it goes under, and when it breaks through it, retests and then stays over it. Retests, stays over. It goes under, and it fails this time and just stays under. So I'm expecting it to fail and go under again, just because of the myriad of other things. I mean, we do have things like and you can get this, what's it called? A COT tool. And so basically here was where people were buying it. This blue line here is professional positions. So since Feb 23, professional positions have declined massively. This is them selling as the market rallies. They bought it down here where you'd expect them to, because they're pros and they're going to call it right, and then they're going to call it right, they're going to buy it, and they're calling it up. You know, they've got enough. And again, if you don't know this, go to, there is a particular one here which I've written, I think it might even be on page 2 now, so long ago. Oh, that's this one here. These guys control so much. So what is that? 26, 38, 41, 42% is controlled by 2,200 accounts. Now that means that big banks, who, don't get me wrong, you know, you think big banks, oh, they didn't like Bitcoin and they said, you know, Bitcoin's never going to go anywhere. Who do you think they had? Why do you think they would talk it down so that they could buy a load themselves? I mean, if you're JP Morgan or whatever, and you see this new thing, it's nothing to put 100 million or 200 million into Bitcoin when it's trading at $40. And of course, the banks will hold some of these big addresses, will be them. I guess the only point of this post is that they can push it anywhere they want. And so if we go back to, you can see them doing it here. So this is where they get long, and look, they pushed it up. They're still buying it. Yeah, this is, they don't sell any here. So in this gap here, in this whole area from here, they are buying it. Up they go. Where's the low for them? It's about there. Okay, so they've started to buy it. And this is when I talked about, earlier on in this, I said, you know, this is the value area. Let's change that to green. This is the value area for them. And so, as soon as it gets into the value area, the blue line here starts to rally. And here, when it's really cheap, it rallies. And then everything else, you know, they pushed it up and sold it. And ever since then, they've been selling it back to you. And here, this last rally is the steepest amount. They've just been selling, 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 selling. All right, so, you know, this bounce here is insignificant in the great scheme of things. Some people bought it, I don't know. Maybe some pros got it wrong. As far as I'm concerned, they've got it wrong. So this tells me most of what I need to know. I want to be on the side of the pros when I'm trading this stuff, and they've sold it and they've carried on selling it all the way up. You have, put it this way, if you want to know more reasons, you kind of have to pay up and look big. Okay, come along to the Discord, buy a subscription. You can get a month if you don't trust us. But if you look around at the other people who are in there and you ask a few questions, you will find that most people think it's well worth it. And the interesting thing is, you'll happily lose you know, $1,000 trading this stuff and getting it wrong, but nobody wants to pay $1,000 for education. Black Hole 88, high pulled about S&P 500. I have just talked about the S&P 500. I think it rallies some more, starts to short squeeze as people don't want to miss out on this latest rally. And then I honestly do expect a real reversal. So I think I'm quite controversial in thinking it goes down to 2,800. But that is where I think it goes. Okay, I think we do have some dismal times ahead. Read up the ideas I wrote. You know, 2,800 is way down here. I mean, what the hell? What's wrong with me? Why do I think it does this? I don't think it does it in 2 days, but I think we do have some serious correction to come. Why do I think this? Because capitalism has again gone mad, and you know, you talk about high inflation post-COVID. Most of that inflation is what I call price gouging. So, for example, your locals, the supermarket groups in the UK, and you know, this will be reflected everywhere else in the world too. The supermarket groups know that inflation is supposed to go up, and especially food inflation. But if you look at the inflation surrounding their suppliers might have had to, you know, increase their prices by 3 to 5%, but food prices have gone up 10%. And all you have to do is look at the supermarket profits to realise that they are profiteering out of headline inflation. It's that simple. It really is that simple. And what happens is that eventually the music stops and there aren't enough chairs in the room. And additionally, you get the fact that it takes months for these effects to feed through into company results. Now, places like supermarkets are very, very safe places for your investment money, because people will always buy food. People will always have to buy heat and light. And guess what? That's really gone up as well. So power and food, which are the two main things people must buy, have gone up by masses. So they're buying less sofas, they're buying less computers, they're buying, I should say fewer actually, because I'm a bit of a stickler for grammar. There are fewer of everything. You don't have the money for a new TV. You may as well stick to the old one. After all, everyone's 4K now. You know, who needs an 8K one? No one's got the spare money. And the people working on minimum wage are getting squeezed more and more and more. Rent's gone through the roof. There is no spare money, and this will take months to feed through to company results. As I said, not necessarily power companies, not necessarily food companies, but it will take months to feed through, months. And by that time, you know, the music has already stopped. The music is stopping now, and it's just a question of, you know, how long until it filters through. And if you get companies not selling stuff, I mean, anecdotally, I can tell you that people aren't hiring, say, tech workers anymore because of AI. AI is supposed to be beneficial, and over time, I'm certain it will be. But when it comes to, you know, I'm a developer, I'm used to earning $100,000, $200,000 a year, and all of a sudden I've just got laid off and I'm looking for another job, and so are hundreds and thousands of others. This is also true of telecoms workers. There's masses and masses of people out there, and this is anecdotally. I hear it from people who hear it from other people, and it's a groundswell. And you can call me mad, but I don't think this is good. When the stock market's going up in the face of such news, be it anecdotal or not, I'm sorry, this stock market is going to go down. It's just a question of when. And like most people, my pension is fully invested. Well, not fully, but has a large proportion of its investment in shares, in equities, and I'm not comfortable with that. Not in the environment we're in. And I'd rather sell it and sit down and earn 5% for a bit, which is what you can get on bonds and so forth. Right, so Black Hole 88 asked, do you think it's wise to set aside some dollars or euros to buy the dip with the current inflation? Well, buying the dip is something that, what is a dip? I like to buy stuff like long-term stuff, like I did in Bitcoin, when everyone is literally crapping themselves. When it was down at 20,000, everyone crapped themselves, and it still went lower, and they crapped themselves some more. So I didn't buy it I bought this with cash. I didn't do I don't do margin trading in crypto. But I just bought it as an investment and sold it a year later for 35% profit. Thank you very much. I'm very happy with that. You don't get 35% out of many things, but you really do need to be doing it when you need to look up every time you walk past a skyscraper in case some banker is jumping out. That is the time. Okay, that's the time when everyone is completely dead and doesn't want to trade it anymore. I'm not buying that. That is when you're interested. And you'll find that I've met a few pros. They're retail traders, but they're, say, ex-bankers and so forth. And I shared a stockbroker with one, and he didn't break any rules. He just said to me, "So this person is incredible. When the banking crisis happened in 2008, he waited and he waited and he waited, and then he absolutely, I think he put something like 40% of his portfolio into UK banking." And he was an ex-banker himself, he was retired. And he made an absolute fortune. He doubled his money. Why? Because he waited until everyone was crying with pain. Are people crying with pain? No. Do I want to buy it? No. The timing's all important, and it's going to be really hard. But what I'm saying to myself is, this S&P thing goes from here to here, up 120%. Say I miss this and I miss 7 or 8%, I couldn't give a toss. I do expect it to rally, the next couple of months. Oh, wait a minute. Look for a second there, like it stopped streaming. I do expect it to rally for a few months more, and I'm saying to myself, I don't mind missing it. It's just, I think I went offline there for a sec. I do expect it to. And we're back up. Okay, I don't know what happened there. My internet probably went down. So Rabia Karim, who's Ghost on Discord, says index, I think, easy to trade. I think most things are easy to trade, with the exception of a couple of the FX pairs and crypto, as long as you understand that you're trying to be the pro and not. So going back to warming to my theme here, if I miss 5 or 10% of this, I'm not that bothered. I've had 120. Leave. Guy I used to know used to say, leave a little bit for the next man. Are there any more questions? So in answer to Black Hole 88's question, do you think it's wise to set some dollars aside? Well, yeah, I'm going to set some dollars aside because I'm selling it. I'm sticking it in bonds where I'll earn a steady rate no matter what. And when the pips squeak and everyone's crying, I'll come out of those and go back into stocks. And this is what the pros do, so I want to copy what the pros do. Okay, so I don't like this rally in S&P. If we stretch it out now, we've not had much of a correction. Short term, this kind of level, if we have a come off to there, I'd be interested in getting long a bit, but only to ride it back up to here. What do I really think? I think long term it's going down. If I'm going to trade this, on a day, as a day trader, I'd be interested down this level, which is like 45.60. It's quite interesting though when you look at other indexes. The S&P is just mental. Nasdaq is as well. Let's have a look. There's all the put call ratios. I always get there. Hang on. US 100. Very similar profile. It's also making new highs. For me, this is mental. And you do see it in the news, and it does get on my nerves the way that the news is presented as pretty much, everyone follows the news and everyone's saying, oh, we're going to have a soft landing, it's going to be great, interest rates are going to go down, everything will be all right. I'm sorry, but that is just nonsense. Everybody is not going to be all right, in my opinion. There you go. Any more questions? Because I've kind of run out. How long have I been on? Seems like years, almost half an hour. So unless anyone has any more questions, as I say, if you're watching this on catch up, come along to Discord and feel free to just ask me, just at me at Paul Varco in Discord, and I will try and respond to your questions. The Discord link is down the bottom if you're on TradingView or on YouTube. The Discord link is down there. Just come in, have a look, feel free to ask questions. It's kind of what we do. So we don't mind answering questions on the free channel and Discord, because hopefully you guys will realise that we're not talking out of our arse and we know what we're talking about, and it's worth spending a bit of money. And I would say to you, rather than try and trade without any guidance or having taken a free course from a broker, and that's another thing I want to tell you about. If you take a free course from a broker, why is it free? He knows he's going to make money out of you. That's why, because all he does is teach you how to give him money. Our courses aren't free, but we teach you how to be like the broker. Right, that's enough plugging, otherwise I get banned. And I will see you all as and when. Have a really good day. Stay out of the woods.